All right, joining us right now is Louis Alexander. He's U.S. Chief Economist and Managing Director at Nomura. We've already mentioned Sarat is here, too. Sarat, I want to ask what you think about where the market stands right now, because we've had a huge run-up, and it seems like we're setting new records every single day. Does that make you nervous?
It makes me a little nervous at this point. I mean, you go a year ago, we bottomed right before Christmas Eve, and now today seems like every day the market goes up a little bit. It's crawling, crawling, crawling. Valuations are pretty full at this point, if not a little bit ahead of themselves. And I think everybody's expecting next year's earnings now to be really good. And I think we're setting ourselves up for a little bit of a disappointment, especially in some of the sectors. I mean, Dom mentioned semiconductors, some of the FANGs, some of the really growthy stocks that are now selling on price to sales again. Here we go, right? It's like momentum stocks leading the way when the fundamentals of the economy are sound, but they're not great. So I think what we have to see is earnings really come up, and I think this overhang of global uncertainty, political uncertainty, there are some negatives that could pull this market for a correction. So I wouldn't chase this rally. We're not selling out of the rally. I'm just using cash on the sidelines to wait.
To wait to see for a pullback, you think?
For a pullback, and then you...
And what's that? But when you say pullback, do you think this is a 3% pullback, a 5% pullback? What are we talking about here?
I mean, you're up over 30+%.
Right.
So I would expect a 5 to 10% correction at this point. We really haven't had one. We've had people waiting for the last 6 months to kind of do this.
But don't you think that... For better or worse, I think there's a lot of people that have been waiting.
Oh, they've been waiting for 5 years.
But that too. But my worry is that they may be waiting much longer, because anytime we even get to a pullback of 1, 2, 3%, people will just put some cash to work because they've missed it before. Right. So you'll never get your 5 or 10%. I hope. By the way. Well, I hope you're wrong, because then just generally it'd be better if you're wrong.
And what's interesting
everybody.
is when you do get the 5 to 10, it was kind of like last year around here this time when people said, oh, it's coming down, and then it's like, wait, it's going to go much worse. So you really have to be disciplined in your approach and say, okay, it's down 10%. I know it could go down another 5, 10, because at that point, everything's going to be negative, right? Maybe the 10 years back to 1.5. Who knows what it is? But there's always something that we don't see. And at that point, you just have to say, if I'm a long-term investor right now, I'm sticking to my allocation, and if I have extra cash, I'll just wait to dive in.
So, Louis, if the key factor is the economy, what do you see? What's in your crystal ball for 2020?
Well, the economy slowed last year to about 1.5 to 2%, and I think people have gotten a little optimistic. We didn't have a recession last year, and so people are expecting some sort of acceleration. I think they're going to be disappointed. I think the economy is going to stay in this zone for most of this year. We've got continued uncertainty around trade. Yes, we have a China deal, but that doesn't settle everything. I think you've just heard that there's questions about how strong the Christmas season has been. But look, I don't think we're headed for a recession, but I don't think we're going to get the kind of pickup in growth that in some sense justifies some of that optimism about earnings.
What questions do we have about the Christmas season? In terms of the consumer, it looks like it was very strong.
Depends on who you talk to. So I think if you look at, say, for example, what you saw going through brick and mortar stores, it was clearly down from previous trends.
Yeah, but I don't think consumers were spending less. I think they were just spending it in different places.
So one of the things that's a challenge is whenever you see changes in patterns of sales, it's hard to track the changes from one year to the next. So it's clear that online is doing very well, but online's still a relatively small part of the overall story.
But if you look at MasterCard's numbers, let's say, or Visa's numbers, I mean, that would be a fairly good indicator, and I think their numbers are up something like 3.4%.
That's hardly a booming season. So in some sense, if you add in sort of inflation that's running around 2%, that's consistent with PCE growth of 1.5. It's not a bad season. It's not suggesting a recession, but it's not suggesting a pickup either.